Bitcoin just did something it hasn't done in 847 days. The chart pattern forming right now has historically led to 300% gains within 90 days. But here's the kicker, 95% of traders miss these signals because they don't understand technical analysis. By the end of this video, you won't be one of them. Technical analysis is the art and science of reading price charts to predict future movements. Think of it as reading the market's mind through data. Every candle, every line, every indicator tells a story. And once you learn this language, you'll see opportunities that others completely miss. The beautiful part? You don't need a PhD in mathematics. You just need to understand a few key concepts. 78% of successful crypto traders use technical analysis daily. Let's start with the most powerful chart patterns. The head and shoulders pattern signals a trend reversal, the bull flag indicates continuation of upward momentum, and the ascending triangle shows building pressure for a breakout. These patterns have been making traders rich for decades because they represent actual market psychology playing out on the chart. Now let's talk indicators. The RSI, or Relative Strength Index, tells you if an asset is overbought or oversold. Below 30? Potentially oversold and ready to bounce. Above 70? Overbought and might pull back. The MACD shows momentum and trend direction through two moving averages. When the MACD line crosses above the signal line, that's a bullish signal. Cross below? Time to be cautious. The data speaks for itself. Traders using technical analysis see 68% success rates compared to just 35% for those trading on gut feeling. The average profit per successful trade jumps to $2,400 when using proper technical analysis, and risk gets reduced by 45% through strategic stop-loss placement. Support and resistance are the foundation of technical analysis. Support is like a floor where price tends to bounce. Resistance is the ceiling where price struggles to break through. When Bitcoin hit $30,000 5 times and bounced each time, that's strong support. When it failed to break $45,000 3 times, that's resistance. The magic happens when these levels break. A broken resistance becomes new support, and that's when massive moves happen. Let's see it in action. Let's analyze Bitcoin right now. Looking at the daily chart, we can see a classic cup and handle formation developing. The RSI is sitting at 52, right in the neutral zone showing room to move. The MACD just had a bullish crossover 2 days ago. We've got strong support at $42,000 and resistance at $48,000. The 50-day moving average is trending upward, and volume is increasing on green candles. All these signals together paint a bullish picture. Moving averages smooth out price action and reveal the underlying trend. The 50-day moving average is perfect for identifying medium-term trends. The 200-day moving average shows the long-term trend. When the 50-day crosses above the 200-day, traders call it a golden cross, one of the most bullish signals in technical analysis. The opposite, a death cross, warns of bearish times ahead. Price above both moving averages? You're in a confirmed uptrend. Volume is the secret weapon most beginners ignore. High volume confirms the strength of a price move. Low volume suggests the move is weak and might reverse. When Bitcoin breaks resistance on high volume, that breakout is real. Same breakout on low volume? It's likely a fake out. Volume should increase in the direction of the trend. Rising price with falling volume is a red flag that the move is running out of steam. Here's the truth nobody talks about: technical analysis won't make you rich if you don't manage risk. Never risk more than 2% of your portfolio on a single trade. Always use stop losses. If you buy at $40,000 with support at $38,000, your stop loss goes just below $38,000. Your potential reward should be at least twice your risk. If you're risking $2,000, you should be aiming for at least $4,000 profit. This is how professional traders stay in the game long term. Let's break down where traders typically fail. A massive 42% blow up their accounts by not using stop losses. Another 28% overtrade and rack up fees that kill their profits. 18% fall victim to FOMO and buy at peaks. And 12% simply don't do any technical analysis at all. The good news? All of these are completely avoidable. The real power comes from combining multiple signals. Don't trade on just one indicator. Wait for confluence. You want the chart pattern, the RSI signal, the MACD confirmation, support or resistance nearby, and volume backing the move. When all five align, your probability of success skyrockets. This is what separates amateur traders from professionals. Patience to wait for the perfect setup. Let's compare the amateur approach versus the professional approach to technical analysis. The difference is staggering and explains why only a small percentage of traders actually make consistent profits. Let's talk about the biggest mistakes that destroy trading accounts. First, ignoring the overall market trend. If Bitcoin is in a downtrend, your altcoin long is fighting an uphill battle. Second, using too many indicators. Your chart shouldn't look like a rainbow. 3 or 4 quality indicators are enough. Third, moving your stop loss. If you set it, respect it. And finally, revenge trading after a loss. Take a break, review what went wrong, and come back with a clear head. Your time frame determines your trading style. Day traders use 5-minute and 15-minute charts for quick in and out trades. Swing traders focus on 4-hour and daily charts, holding positions for days or weeks. Position traders analyze weekly and monthly charts for long-term holds. Here's a secret, always check the higher time frame before trading. If you're trading the 15-minute chart, check the 1-hour and 4-hour to understand the bigger picture. The trend on higher time frames usually wins. Let's walk through a typical successful trade from start to finish, showing you exactly how professional traders execute their technical analysis strategy from identification to profit taking. Average trader profit, $847 per month with technical analysis. Here's your roadmap to mastering technical analysis. Follow these 5 steps in order, and within weeks you'll be reading charts like a professional trader. Don't skip ahead, each step builds on the previous one. Remember, technical analysis is a skill that takes time to master. You wouldn't expect to become a surgeon after watching one video, right? The same applies here. But the beautiful thing is that every chart you analyze, every trade you review, makes you better. Start small, be patient with yourself, and never stop learning. The market rewards those who put in the work. So there you have it, your complete guide to crypto technical analysis. You now understand chart patterns, key indicators, support and resistance, volume analysis, and most importantly, risk management. These are the exact tools professional traders use every single day to make consistent profits. The difference between you and them now? Just practice and experience. And guess what? You're already ahead of 95% of traders who never take the time to learn these fundamentals. Dropper if you're ready to master crypto trading. Before you go, I want to leave you with this: the market doesn't care about your feelings, your hopes, or your dreams. It only responds to supply and demand, which shows up as patterns on your charts. Technical analysis gives you the ability to read those patterns and make informed decisions. Will you be right every time? No. Will you be right more often than wrong if you follow these principles? Absolutely. That's all you need to be profitable in the long run. If you found this valuable, smash that like button and subscribe to CoinPulse for daily crypto technical analysis, market updates, and trading strategies. Drop a comment telling me which cryptocurrency you want me to analyze next. Bitcoin? Ethereum? That obscure altcoin sitting in your portfolio? Let me know. And remember, in crypto, knowledge is profit. The more you learn, the more you earn. I'll see you in the next one. Stay profitable and feel the market beat.